You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back for the second episode of your bi-weekly options feast known as the Option Block. My name is Mark Longo from don't forget the THE, theoptionsinsider.com is the place to go for links to all of your favorite shows. You want to go back into the archives, you have a question about a show, you want to go back and check it out. Maybe you want to go back, 10 years, maybe 15. Well, we got you covered there in all the archives. Of course, our app will get you there as well if you just want the shows. Of course, the website also has the links to the articles, the earnings move results in season, most actives, midday and end of day. We do that twice a day for you folks. We really like you folks, and a whole bunch more over there. Theoptionsinsider.com is the place to go. And of course, if you want to go above and beyond, you want to get access to our Double Pro Week, which is ongoing right now, Double Pro Q&As, even though we had to move the Wednesday one. Moving Mr. Tony Sliba around a little bit, but we'll get him back on probably on Monday. Before I depart for the southern environs for OIC in Texas next week. And of course, we also have Options Oddities coming up tomorrow. We had another great pro Q&A with the one, the only Uncle Mike earlier this week, as well as, of course, live access to this show and every other show that we do here on the network. Where do you go to get all that goodness, giveaways, and a whole bunch more? theoptionsinsider.com/pro, or if you're really cool, /secret club. Remember, if you use that latter one, don't tell anybody. It's a secret. And let's see who's joining us on the old OB show today. First, let's go out to the aforementioned hinterlands of Chicago, where we are joined once again by the uncleist of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. A, welcome back to the program. And B, unfortunately for you, sir, it is not on an Uncle Mike type of day.
What do you mean? We're up 44. We're up 43 points from the low of the day.
Well, there you go. See, always a ray of sunshine to be found with you. Unfortunately, listeners, where we're going next, there is no sun. There is only darkness, because we are rolling on out now to the shores of Maine, where it is always shrouded in dense fog. It's like the mists of time. They cannot penetrate the shores of Maine. Only the clam pirates can get in there. So he is ever on guard against their encroachment upon his shores. Yes, he is the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Once again on lone vigil in his silent tower there on the shores of Maine against the clam pirates. But breaking away for a moment to talk to us about volatility. Mr. Rock Lobster, how go things in your lone tower, sir?
You know what? Today is actually a lovely breezy day, sunny and breezy in Maine. So it's a little less dark and foreboding as usual.
That should make it easier to hit the clam pirates with the shotgun, right?
Yes, something like that. Yes, you could say something like that. So Actually, the Clam Pirates are not here because the tide is in and they are out. So that's what we got going on.
What we got going on is the trading block. So let's get to it.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the trading block, the portion of the show where we do just that. We break down what the heck is trading. And as I alluded to on the show, man, we've done a lot of living over the span of the last 24 hours. Of course, yesterday was Fed Day, and everyone was kind of wringing their hands, worrying about, oh, here comes the Fed, 0.75 of a point. Oh, my goodness. Dogs and cats living together, mass hysteria. And when Powell kind of dialed that back a little bit, I say only in air quotes, only went a half point. Markets were like, woohoo, here we go. Up 3% pretty much across the board, which, as you'll recall, what we were talking about last week on Volatility Views with the Rock Lobster and Mr. Jam Croissant himself over there, where we talked about, looks like probably the market was going to rally after the Fed and then probably going to turn to the dark side right after that. Well, lo and behold, that's pretty much exactly what we're getting today, listeners. Once again, all the markets right back down to where we were not that long ago. S&P off a little over 3%, about 3.05%. The NASDAQ, my goodness, 4.25%. They are coming for this thing. And the Dow off 2.6%. Dow is the laggard. So we are once again below that magical, mythical 4,200 level, about 41.75. So as Uncle Mike alluded to, we have rebounded off the lows, up almost 40 handles from the low this morning. So that at least is a ray of sunshine. And since he's our resident ray of sunshine, let's go out to him first. Mr. Uncle Mike, walk us through the last 24 hours for you. I know you were waiting with bated breath for the Fed announcement. What were your thoughts on what we heard from the Fed? What were your thoughts on the, shall we say, effervescent market action that we saw that followed it immediately? And now the even more perhaps sudden, quote unquote, turnaround today, sir.
So this makes me think of a quote from the movie Waterboy, to where that one weird dude that walks around and says, "You can do it.
You can do it." I just watched that recently. That's actually a great movie.
And so I'm thinking about this yesterday. The guy goes, "You can do it." And then when I think Adam Sandler says, "Oh, I'm not going to play," and he goes, "Oh, we suck again." And so that's kind of how this market feels. You can do it yesterday. And then today, oh, we suck again. And I think just with yesterday, there was just such a level of elation of the Fed. I don't know if it was necessarily the fact that we only went up 50 points instead of 75. He had some comments saying that along the way that he might not raise more in the end. And I think that's really what drove the market up so insanely high yesterday. But apparently it was a bunch of short covers or something, because it's definitely not happening today for obvious reasons. We're about down. If we were basing this market on yesterday's open, we're probably down about 15 points on the last 2 days. It's just that we had such an insanely violent move to the upside yesterday that we kind of just are taking it all back and then some a little bit. So I think just with where we are in this market, it's a very volatile place right now. And today and yesterday's movement shows that. The fact that we were up such a ridiculous amount yesterday. I was actually trying to sell call spreads yesterday, but I couldn't do it, or buying in the money put spreads. I couldn't quite get filled on it. But nonetheless, we have the market with which we have today. And VIX is no longer above 30. We're back in the mid 20s. Oh, S&P's up 100 points. We're right back to where we were, quite honestly. So we have that going against us today for those of us in the bull camp. One thing that I am noticing, though, today is that we got down to 41.21 on the SPX. We are up 45 points from that low. So that is something that is a ray of hope, so to speak, and that we're not just going straight down. We actually are bottoming. At least it appears to be that way. We're at the same levels that we are, or right now we're at similar levels as to what we were a little over 2 hours ago in the marketplace. So we do have that going in our favor. However, let's look at the reality of things is that the S&P 500 is down 3% on the day, and that's something that needs to be respected. The other thing that's existing still today, it existed yesterday, is that stocks and bonds are moving in correlation with one another. Stocks are down, bonds are down. We still have that today. Yesterday, stocks were up, bonds were up. Today, they both went down together. So it doesn't usually happen that way, but have the understanding that anything can happen in any market at any time. There's no rule in trading that says that stocks and bonds must move in inverse directions, because that's obviously not been the case today, and it hasn't been recently in the marketplace. So we're seeing that. Silver is actually down roughly 2.5% on the day, so we are getting a little bit of a pullback there. A couple of other things is that we have oil is relatively flat on the day, and we do have some movement in natural gas up about 3%, which for natural gas, that's really not a huge thing, but it is something that could be a ray of hope if you're invested in commodities. But then the stock market itself, everything is down across the board throughout all sectors. We still haven't reached the lows of the year again yet, and we're still about where we were 26 hours ago. So it's just concerning the fact that we have such a rally and then we give it all back so insanely quickly. So I remain cautious with this market. Even if we do go up another 100 points in the next hour, which is all these possible, I still remain cautious. The markets are negative on the year, and if the market isn't even strong enough to be positive on the year, then it's not a strong market. And that's what I'm seeing today.
All right, let's go on out to the dark and stormy shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Rock Lobster. Same question for you, sir. We've done a lot of living over the course of the past 24 hours. We saw Mr. Powell come in, do his deal, markets rally, and then, as Uncle Mike alluded to, come right back down aggressively. Pretty much, we're almost back to where we started in many degrees. What are your thoughts on what we've seen play out and the wild roller coaster ride we've all been on, which, as you'll recall, you were on that show. We predicted on Volview, sir.
Yeah, we did see some, a little pre Fed buildup, and the vol came in a little bit, quite a bit for Monday, and then what was the jam croissant saying? Where's the vol going to be Wednesday? And then he had a Monday, Wednesday, Friday. So I think we're a little higher than what we thought, to be quite honest. At this point. But from what the reality is, volatility is going to go up when the market is swinging, it's 3-4%. So you're talking 48 realized vol per day and 64% realized vol. How is VIX going down? So I think that Qs were down 5% at one point. So almost, it's starting to touch a limit possibly. And I also think it could easily get there again, So I guess, inflation is just not going away. That's what I think that's kind of the story right now. We thought it was going away. Actually, I shouldn't say we thought, but maybe starting to, the pace was coming in. But, today's numbers, I think the reality is Powell's not really getting any, he's not getting any help from the insane spending policy. I'm sorry, but they got nobody to blame but themselves, the federal government and the Fed. They juiced this whole thing, and then one thing got knocked on top of another. And it all just so they've got a pickle. Rates are way too low for what's going on. There's too much money sloshing around, and at some point, it's got to stop. There's no, I would like it to not be that way, but that's what it is. So for right now, I think we're still dealing with all that, and I don't think it's a problem that's going to go away anytime soon. So, I guess on a simple level, you know what, until the market gets some sort of sense of what's happening with rates, how bad really is inflation. The short answer is it was much worse than Powell said all year. The whole transitory inflation thing, they should have started raising rates right away. Like the fact that they waited 8 months or 6 months or whatever, they had a pretty strong equity market. You know, everybody had their stimmy checks. You know, I just think this is way too much, too little, too late. And then, you know, you could argue that maybe some economic policies might have helped, you know, push oil prices up. And then the Russian war thing happens. And then the Chinese thing happens with they re-shut down, which puts supply chain like it's just all this stuff, right? It's just not. Anyway, so what you have now is you just have a kettle of fish, right? It's just things are kind of rough. So, and there's nothing the Fed can do at this point. So the markets are just going to kind of sell off until they stop selling off. And you know, and TOSAW is right. You know, we're not at highs of the year. We're not anywhere close. And like I thought I was going to sell some puts today, but I'm like I'm going to wait. You know, I'm waiting because I like to see maybe a day where, you know, the Qs aren't down 4% or 5% because it just continually keeps happening. And, you know, now I'm starting to say like, well, where were we before the pandemic started? Because basically the whole rally was pumped up with, you know, it was pumped up with funny money. The government spent way too much. The Fed pumped way too much in. And that's what we got. So, you know, like 3,700 is where we were before the COVID thing hit. And, you know, that's not very far away right now. It's only 10% off of where we are. And that would pretty much erase the whole nonsense that we had post. You know, and to be honest, I'll start really thinking about that level. But for right now, I think we just keep trading. You get the violent rally. Almost every violent rally is sold. But I think ultimately that lower number is where we want to get to. I mean, I hate to say it, but I'm normally actually not a bearish person, but there's just not a lot going right. And there were some pretty high valuations attached to things. And I just think those valuations are coming back to earth without the dollars there to support them. So I think that's where we are. And, you know, realized vol is sky high. So I'd like to say it's going lower, but I don't think it is. There you go.
Indeed. A lot to parse out there. Maybe I'll give you a twofer, a double dose, some good news and some bad news. First off, Uncle Mike, good news. Portillo had their earnings this morning, and in spite of the fact that the market is getting annihilated, Portillo's is up, baby, up 1.25%, a whopping 24 cents. They are spitting into the hurricane, Uncle Mike. Portillo says, sell off. What sell off? We're going to keep selling hot dogs. Inflation be damned. What say you, Uncle Mike? Does that cheer you up?
Well, I mean, I'm not excited about the Portillo stock being down like it is, but I think that with where Portillo's is, it's a strong company. I literally ate there last night. Got a big beef combo, by the way. And I think it's a good company for the long haul. And you just have to be able to deal with the short-term swings because it's Portillo's.
Yeah, that beef combo with the sausage, that's pretty good. I'm not going to lie. That's worth 23 cents up today in any day. So now how much would they have been up if it wasn't a 4% off day in the NASDAQ and 3% off in the S&P type of day? So yeah, you keep doing you, Portillo's out there. Now on the flip side, a little bit scarier data points. I was talking with your buddy, Mr. Overby, yesterday on Options Playbook Radio, and I happened to come across this poll we did. Mr. Rock Lobster, you were talking about 3,700. But a poll we did back on March 24th of 2000. We don't go back that far. March 24th of 2020. And we asked you folks, kind of similar action to what we're seeing right now. The markets, as of yesterday, were rallying hard on the heels of some Fed action. Back then in March of 2020, you know what was going on. It was the Fed kicking off stimulus fever. The market was up 8% over the span of a couple of sessions. And as we asked you back then, racing past the then lofty level of 2,400. And we asked you folks, does this rally have legs or is this the world's biggest dead cat bounce? You think we'll be past this level at the end of the week or not? And 73% said this is the world's biggest dead cat bounce. We will not be north of 2,400 by the end of that week. So everyone out there who's writing into us saying, Oh my, how low can we go? How insane can this get? Not too long ago, a little over 2 years ago, 73% of our audience, maybe you were one of them, were fading this rally really hard. So everyone out there is now looking at, 4,100 like, oh, we've sold off quite a bit. We can rally from here. Just saying, just put that data point in your back of your mind. Mr. Uncle Mike, perma bull that you are, does that data point and the fact that 73% of our audience was fading 2,400 not too long ago, does that give you pause, sir?
You never know. Our audience is a very intelligent audience, but you never know who is voting on those polls. So it's hard to say if the polls are a good representation of our audience. But on here, I do think that there's a lot of reasons to be bullish in that the news of interest rates increasing has been around for a while right now, and we're only down roughly 13 or so % on the year. So I'm a bull, but I'm also not a dumb bull, meaning that markets are negative on the year. So I remain cautious.
Mr. Rock Lobster, what say you to that level? Forget 3,700, sir. Not that long ago, our audience was overwhelmingly fading 2,400, sir.
Well, fading like we can't get there?
Yeah, we couldn't get there by that time at the end of that week, and we were rallying already 8%. So that was a bridge too far, sir.
Right. No, I still think markets could be up by the end of the year, but I don't think I'm still I'm looking like 3,700 or something. Basically, I just think we're doing the redo button personally. Pre-COVID redo.
Redo all the way down to 2,400. That's what you're saying.
No, not 2,400.
I know. I'm joking.
Just
the Rock Lobster says, look out below 2,400. Here we come. And he's selling all the way down there, baby. Just a bit of a data point I wanted to put out there for you listeners. So everyone was like, man, how low can this market get? It can get a wee bit lower. So just bear that in mind. If you're smoking the hopium, if you're loading up when we get down to the 4,100 level saying, here we go, sky highs ahead, certainly you can be right. You have been for the better part of the last couple of years, but just in general, watch out below a little bit. But you know what? Since we dosed you with that negativity, let's come back with a little bit more positivity. We got more positive. We got numbers all over the place today, listeners, including, as I said on Monday's show, we're going to get the numbers from OCC. Well, immediately after our show was done. That was pretty much the case. We need to teach OCC folks our broadcast schedule here so they can get the numbers to us on a reasonable time to discuss them on Monday's show. But we have them for you in our hot little hands today, listeners. And the question we've been asking, if you had a chance to check out that panel we posted for you, nice little secret recording we made just for our listeners out there. How much do we like you folks? You don't have to come all the way to Chicago and pay all the money to go to a big industry conference to listen to me talk. We'll make it for free for you folks out there. Just don't tell anybody. It's a secret. So check that one out. We debated this exact topic on that panel, which is, can the party continue? And the answer for April, once again, seems like a resounding yes. The OCC, of course, coming out with the numbers for April, the most active April ever. So that's saying something. March was the number 2 month in history. April, not quite that high, but April also has the holidays. It has a pretty short actual trading month to it, which is what you have to look at with these numbers, listeners, because we only saw 782.8 million contracts. It may sound like not a lot at all because we've been pushing over 900, 930 some months out there. This is well below that, obviously, but we also had a pretty shortened actual trading month. That really impacts, obviously, the numbers you're going to see. But from an April perspective, we've never seen a busier April. And last year, 2021, again, no slouch. We had come off a little bit, but we were starting to, I think, kind of turn back up and maybe start heading into the meme wave 2.0 out there. So April last year was no slouch, and yet they beat it by 4.2%. A couple of other nuggets. ETF options, that's where we saw a ton of growth. 55.4% growth year over year. BITO, obviously, some of that. We have some new players out there again. We have, the SVIXs and others of the world. Those that aren't really doing much yet, so they're not accounting for a lot of that. But still, huge surge in ETF volume, 55%. So just a big month. I'll just drill down really quickly. Equity options, 436.9 million. That was actually down 9.9%. So that's interesting. But then here comes the big dog, which is ETF options, up 55.4%, 294 million. Last year, it was 189 million. That's a huge increase. The ETF options below, I need to drill into that a little bit. That can't all just be SPY and the big dogs. There has to be some other stuff popping off. Obviously, BITO doing 60,000 contracts a day. That's not a small number out there, so that could certainly be a part of that. Index options up 26% to 46, almost 47 million. So even though overall volume, like I said, 711 million last April, 778 million this year. So that at least bodes well. I don't know, Mr. Uncle Mike or Mr. Rock Lobster, are either of you surprised that April was the busiest April in the history of the business, or it seems like so far at least, we are on pace to have the party continue for 2022 in terms of overall volume?
Surprised by April, not surprised by having the party continue for overall volume.
Mr. Rock Lobster, are you surprised? I know you've been kind of fading retail volume a little bit lately. Are you surprised these numbers are so strong?
No, I'm not surprised. I'm not surprised at the, because April, I mean, you think about, basically, I mean, when the market's moving, we get paper. So, I mean, you're having 2-3% days. I think, the public trading options is much, I feel like they're, savvier. They're like, hey, there's some volatility. We're going to use options to trade the vol. So that doesn't surprise me at all. But will the party continue? I think the volume party is going to stay pretty lofty because, you have to face it. When you're going to trade options and things are swinging up and down, 2 or 3%, you want to buy options to make when things move. So I think that will draw it will keep drawing people in.
You know what else is drawing people in is a wee bit of the old earnings, listeners. You guys know where to go to check out the latest earnings move, results, season, and trades reports. You got 4 reports coming at you now, completely for free. How much do we like you people? Over there, theoptionsinsider.com. Big names popping off this week. You may not know it because the Fed's sucking up all the oxygen in the room, but you had Berkshire, Six Flags on Monday, Pfizer, Hilton, AMD, Airbnb, good old S-Bucks, Lyft, Caesars, and Match Group. We've been talking about Match Group a lot lately on options oddities and a little bit on the odd block, so they've been one to watch. Moderna, Wednesday, CVS, Marriott, Uber, and Marathon. Today, Crocs, good old plastic shoes, DoorDash, WWE, and Yelp. And then tomorrow we got DraftKings, Goodyear, Under Armour, and Cinemark out there. Maybe Cinemark will buy a gold mine or two, and they could play in the AMC party as well. Let's pop it off here. We mentioned Portillo's. Let's look at them really quickly. They were popping off before the bell today. When the last time we ran the numbers on them, they were over $20. They were $20.83, so a little bit lower than that now, 19.5. They were pricing in $2.50, listeners. In the past, they'd moved $0.75. So they were pricing in a fair amount of juice. And so far, it seems like only delivering today about 1%. So not a huge move out there. Of course, if you look at it from when we last ran these numbers, which was $20.83, they're down $1.30. That's still a little more than half of what they were pricing in for their straddle. That's a little bit more juice. So Portillo's outperforming from an earnings perspective, from an earnings vol perspective, not so much. This is what we care about here on the show. Let's go to some more out here. Let's go to DoorDash. They are today after the bell. They were at 81.5 the last time we ran these numbers. They were pricing in $13.40. In the past, they've moved $8. So they're pricing in a whole heck of a lot of extra juice out there for DoorDash. Again, DoorDash kind of the front lines of the food delivery during the pandemic. So a lot of people keep an eye on that to see how they're going in this, what we hope to be post-pandemic phase. You never know, but hopefully out there. Let's go to wrestling, WWE tomorrow. Actually, today after the bell. They were at 58.39 when we last ran these numbers. Man, WWE is holding up that bid. Nothing can seem to crush them out there these days. They're threatening $60. Back in the onset of the pandemic, I think they were in the mid to low 30s. So they've had a nice little pop. 59.92 still right now. So yeah, they're holding up this bid, even though they're off $1.60 today. So they've had pretty much a run of unched since we ran these numbers last. But wow, yeah, this one's been looking good. See, how high did it get out here? Got up to actually $70.72. Looks like that was back in June of last year. So they hit 70. Wow, I know Vince was dumping some stock back in the 30s, I believe, to pay for the whole XFL Part 2 fiasco. So not a good look for him. But 58.39, they're pricing in 460. In the past, they've moved 467. So they're expecting a lot of the same. There has been a lot of M&A rumors and acquisition rumors swirling around WWE for a while. It's part of the reason I think why they've had this little bit of a run they've been on of late. And just in December, they were trading $47. So not a bad little run for WWE just since the beginning of the year here. Yelp restaurant reviews. How's that looking out there? They're today after the bell as well. They were at 32.5 the last time we ran these numbers. They were pricing in $3.05. In the past, they moved $2.41. So a little bit of restaurant review vol being priced in. Let's go to DraftKings tomorrow. Kind of the leader out there in the former fantasy, now just online wagering. But I haven't had a chance to open up an account for them in the last month or two out there. And it's been interesting to see. I wanted to check them out for a while, what they bring to the table. And they definitely have their act together when it comes to prompting you, try to get you to make wagers, giving you all sorts of incentives to do it. They definitely have an interesting approach. Let me put it that way. They have, I think you can wager on WWE with them, which is kind of crazy, but you can. They're tomorrow. Yeah, they're tomorrow before the bell. 1368 is where they were the last time we ran these numbers, and they were pricing in $1.73. In the past, they've moved to $1.10, listeners. So they're pricing in some juice out here in DraftKings. Obviously, this space getting a little bit crowded, a little bit competitive. There's FanDuel, there's a million others, Caesars, MGM. Every time you turn around, there's an ad for some other betting service you never heard of. So definitely a crowded space out there. I think DraftKings had mentioned in the past they were spending a lot to acquire new customers, and that was hurting them. We'll see if that's the case again this cycle. So far now, our most recent numbers we have, listeners, week 1 for earnings season was not looking pretty good, 63%. Week 2, so far a little bit better, with 365 names reporting 77%. So looking a little bit stronger. That means the season has bumped up to about a 74%. So again, still pretty bad, but a little bit better than it was looking before. Let's see if the odd block is looking good, because it's time to unleash the Eye of Sauron.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Let us do it. Let us unleash the beast and see where it fixes its fiery gaze today. And first off, this is a newcomer to the Odd Block. This is the kind of paper that a segment like this, you could argue, was designed around. This is a little cheapy pharmaceutical name with some call action. People think, even to this day, when they think of unusual options activity, that's probably some of the first stuff that springs to mind. Maybe you're thinking now as well as some call action and, let's say, a tech name like in the meme palooza, but biotechs with some upside calls, that's kind of the name of the game when you're talking about unusual options activity. Today, we are talking about newcomer Intercept Pharmaceuticals, Inc., ticker symbol ICPT. They're trading right now $19.90, up a whopping $3.65, or 22.5% today. So yeah, this is a good old-fashioned, old-school biotech, listeners, popping hard off some news. I don't know what this one makes. They do novel synthetic bile acid analogs to treat chronic liver disease. Well, there you go. Hopefully that enlightens you a little bit. People are obviously liking what's going on. They have a deal to sell their U.S. rights for, looks like, one of their treatments. So yeah, let's look at the year that was out here on this name. A year ago, they were almost exactly where they were right now, a little over $19. So they're about $1 below where they are right now, $19.96. Then they sold off in May to $15.46, and then they rallied again on June 8th. They hit $19.84 again, and then they popped up more on June 25th to $22.06. That was pretty much their high for the year. They hit $22.36 that day, actually was the high, and that was it. And they sold off hard again. This looks like such a biotech chart here, listeners. They sold off pretty much down to their 52-week low about a month later. August 20th, they hit $11.60 intraday before closing at $12.99. So quite the drubbing there. Then they rallied hard again by November 9th, 1938. Right back down again by, let's see, March 4th, 1337. and then bouncing around in the mid to high teens and then actually back a few sessions ago, they were back $15 again. So they had given some of that back until, of course, today, where they popped from $16.19 to $19.90. So, yeah, this name has been all over the freaking place over the course of the past year. And once again, surging straight up. If past is prologue, it won't be able to maintain this for long, but we shall see. We shall see. Let's see what our Eye of Sauron found out here, Mr. Rocklops. Looks like somebody wanted to either catch the wave or perhaps get in ahead of the wave, because we had someone coming in this morning scooping the September 17 halves. This market was surprisingly tight, 550 at 560, but again, they were in the money calls at that point, so you're effectively making market on stocks, so it should be a little bit tighter. They still lifted the offer for $5.60 when the stock was $19.52, listeners. So they paid, was $2 in the money exactly, and they paid $5.60 for it. So that's a heck of a lot of juice. I say 103 vol, if you're wondering, listeners. There are earnings tomorrow before the open, but it looks like they're getting their pop today because these calls are looking pretty decent, even though you put them on not that long ago. So they could be they haven't moved that much. They put them on, but the stock was 30 cents lower, but still they are bid out. So that's always a good thing for him. Mr. Rock Lobster, what do you say on the return of some meaty calls on a cheapy biotech, which is pretty much the reason why this segment was conceived, sir? As TOSAW was before, you are now stunned to silence by the aggressive nature of this paper.
I was so upset that I thought I had actually hit the button, but I did not. Oh my word! Yeah, this is a biotech massive juice extravaganza, Intercept Pharmaceuticals. So all I can see on my screen, I'm looking at Livol, and everything is green, meaning they're buying every call they can see. So those calls, I think a bunch more paper went up as well. So it's basically an unending stream of purchasing paper here in this stock. So market going down, be damned, this stock doesn't care. That's what I'm going to say.
They're loving it, and they bought in the money calls that are now bid out, sirs. You must love these. They must be your favorite trade of all time.
Yes, that's you have to have rules, and right now they've got 5,900 of these things have traded, and they are $6 bid at 630. So good luck trying to buy some of these things right now, because those things are going to move like wildfire on the upside.
I know someone who might have around 3,000 he might sell you. We'll see. Maybe you hit him up, see what he says. I think he wants a little bit more, though, if he's loaded up on these bad boys. We'll keep an eye on these. We'll probably know before September how well these are working out. So far, pretty good. But like we said, he paid 103 ball. He needs a little bit more bang for his buck to make this thing a payoff, unless, of course, he gets the heck out of Dodge right now, which doesn't seem like this is the kind of paper that he would do that on. Let's go out now let's review some paper, Mr. Rocklop. So you'll recall this one. Let's go all the way back to the heady days of October. Oh, who can remember back so far? Pre-Ukraine invasion, pre-Fed madness, all this craziness. We were all just living life, having a good time, the halcyon days of October. Not a care in the world. And we were talking back then on the October 21st show, listeners. As you'll recall, this was kind of the beginning, or maybe actually looks like we had a couple of these going up. This might have been like the second or third by this point. Remember, we talked about that explosion of upside paper in Vodafone, ticker symbol VOD. In particular, it was the April 17s that everyone and their mother seemed to love. They were piling into them. When we profiled it again on October 21st, we saw, as we talked about it even then, back to the well in Vodafones. This was not the first time we had seen it even then. 44,013 of the April 17 calls were going up for 50 cents. It wasn't a huge vol. It was a 26 vol, but it was a decent level for Vodafone. The stock was $15.62 at the time. And listeners, you'll recall that so many of these went up. I don't often do this, but as a bit of a fun flyer, maybe if you're not on the pro side, you don't know this, but I took a fun flyer. I kind of split the difference. I went into the Jan 17s because they were a lot cheaper, because go figure, A, they're shorter time frame, and B, someone had bid up the 17s in April to the tune of 100,000+ contracts. And I didn't want to be the 100,001st, easy for me to say, contract on that strike and paying all that juicy boss. I thought I would split the uprights, go out to January, And it seemed like it kind of worked until it didn't. And I'll break down why it didn't for you in a second. Because as we saw, if you listen to Options Oddities, the stock shot up to 17.5 during this time. But it did it. Well, let me break it down for you. The whole journey that the stock has been on since we did it. It hit a high actually right around, it started getting up to that 17.5 level right around January expiration, listeners, which you'll know is kind of the worst case because it was right around the at the money strike, or the 17 strike, I should say, at the time, right when my options were going away. So it was the worst time. And then immediately after my options expired in January, the stock hit its high of about, looks like around $19 or so. That was in early to mid-February, around Valentine's Day. I was hovering around $19. So these calls were pretty decently in the money. And this person or people could have taken them off for quite a bit. By the way, when they put them on, the stock was $15.62. So they had a nice little pop. I missed out on it because I went to January. That's one of the things you talk about sometimes with your timing is everything when it comes to options. And I missed the actual high on these by about a week. So it turns out if I had gone and bought the April, it would have worked out. I tried to be a little bit more clever and save some money and still get that same pop. And I missed it by about a week. That's sometimes just the worst case scenario. That's sometimes how it unfolds. And that's how it unfolded there. And then, weirdly enough, I said they put up 44,000 of these. The stock pretty much came back down. So by the time these options expired in April, the stock had come back down to $17.5. So they were pretty much at exactly break even. They paid 50 cents for the 17 calls, listeners. So these calls were break even. And they were still open. The 45,000 of these were still open on expiration. Now, more of these had traded leading into this and coming after this, and they had taken some off, I do believe, in the height. So it's hard to exactly tell whose contracts were open at the time of expiration. This person could have closed his out earlier, but there were, weirdly enough, almost exactly as many open as traded at this time. There are about 45,000 still open. So if we want to assume this is the same person, then he pretty much scratched. And if he bought stock at 17.5, which he pretty much did if he kept the options, he's wearing it right now because the stock is back down to 15.5. It's down pretty much to a little bit below where it was when they bought the calls to begin with. So this has been quite the saga here in Vodafone, Mr. Rock Lobster. As I recall, you did not play on these. You kind of just watched from a distance. And it ended up working out until it didn't. It looks like this guy, he might be now wearing it to the tune of $2 in the other direction, sir, if he took the stock.
Yes, I believe this one, because Vodafone traded $19. So these Aprils got to quite a lofty level. What's hard to believe now is Vodafone was $19 and it's now back to $15.
It's like nothing. It's like nothing happened. It's exactly pretty much where it was when we first started talking about it.
It's unbelievable. And I think there's a lot of, and this is one thing that Mike was talking about overall here. Like with stocks, like there are some stocks that are at pretty good levels. I mean, I'm looking at a lot of dividend paying stocks that are paying 4%, like Walgreens, Gilead, stuff like that. Vodafone is paying $1 divvy per share in 2021. So we're waiting for the 2022 dips to come out, right? For that stock. But I mean, even if you're paying a dollar per share, let's say divided by 1547. So we pick, it's paying, Vodafone is paying a 6% dividend right now. So and I realize it's just a sleepy European, company, but, and I guess, there is potential competition from, Tesla putting cell phone satellites in space or something like that. But, still you look at it and you're like, wow, that's a 6% dividend. So, I mean, there's a reason why there's no growth and it's just a giant utility basically. But again, cheap stock if you want to have like some dividend paying stocks, but there's a lot of them out there like there. So yeah, I think whoever bought these calls, if they didn't get out of them, after probably making massive bucks on them, to be quite honest. But I mean, if you never took the money, you kind of blew it because they probably had $1.50 net profit on that trade, which is insane.
completely insane.
So that would
and
have
now
been a 3x trade.
Yeah, and now if they
took it,
if they got the stock, which looks like they did, they're down $2 on 4.5 million shares, so $9 million. That's a big ouchie to not take the profits and then take the stock and then ride it down. I mean, that's a worst case scenario. Maybe we can assume they didn't do that or got out of the stock, but my goodness, yeah. To have the stock be unched 5 months later and be out $9 million plus missing the profits. Yeah, that makes my little pittance on the Jan calls seem nothing by comparison. But you know what's nothing by comparison, listeners? We always love your questions. So let's get to a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where we ask you guys questions on terms of our polls, and you guys also send in your questions and comments. Let's pay off our polls here really quickly. We asked you guys last week. We could ask again this week, probably. It's still relevant. We asked you back in the red, in the S, how are you positioning in your broad market portfolio? And in cash, waiting to BTFD, winning with nearly 36%. 33% about saying you're still long SPY or SPX. So hopefully you've had quite the roller coaster if that's you over the last couple of days. 25% saying you're long SPY or SPX, but with some sort of hedge. And only about 6% say you're going into crypto. And right now we're asking you, with the Fed, Ukraine, and inflation all conspiring to keep options volume high in 2022, can we possibly beat the record level of 10 billion contracts, which we hit last year? Two simple answers to this one. Yes, we're going to do more than 10 billion, or no, we won't hit 10 billion. Let's go around the horn, see what everyone thinks. Mr. Uncle Mike, I just gave you the numbers for April. Does that change your opinion at all? You think we're going to hit 10 billion this year or no? And what do you think our audience is voting for?
I think we will, and I think the audience agrees with me.
All right, Mr. Rock Lobster, same question for you, sir. Do you think we're going to hit that number or no? And does today's April numbers I just gave you, does that color your analysis at all?
No, I think we're going to hit those numbers, and the April is just, I think volume is still going to be good, and that's where I am on that one.
Our audience is agreeing with both of you. 61.5% saying yes, we will do more than 10 billion contracts this year. Only 38.5% saying no. You got a little bit of time left to play out there if you have not done so already. Here's an interesting one. This came in from YouTube. I use interesting in air quotes because we don't talk a lot about taxes, but this person sent this in to our show. So he sent it in response to our episode, The Gong Show. I like to make sure people get their questions answered on the actual show they send them into. Sometimes when they hit the network, we're doing some other shows, so they get routed there. But they want them on the show where you sent them in. So Thomas Lee sent this in via YouTube. A lot of you like to listen to the show on YouTube. We get it. We don't judge. However you want to consume it, have at it. Thomas Lee wrote in to say, I have a tax question regarding option spreads. If I close out a weekly call spread, one leg will usually show a profit while the other leg will show a loss. Will I be able to deduct the loss on my taxes because of the wash rule? And what if I continue to do a similar trade on the same stock the following weeks? Mr. Uncle Mike, you're our resident advisors. That means you're our quote-unquote resident tax expert as well, even though I should give the caveat, none of us are CPAs or tax professionals, seek actual tax guidance for these. But Mr. Uncle Mike, looks like he's buying verticals. I'm assuming he means verticals and not like weekly calendars. I'm assuming he means straight verticals in weekly options. And he says one leg of his spread is showing a profit while the other leg is showing a loss. Can he deduct the loss, just the loss? He's not talking about the gain, just the loss because of the wash rule, sir. And then can he do the same trade on the same stock the following week? Mr. Uncle Mike, what say you, sir?
Oh, man, you're putting me to work today. From a tax standpoint, let's say that you do that trade once throughout the year. What'll happen is the gain and loss will both go on your 1099. And so let's say you made $200 in profit, but you had a $100 loss. And so ultimately what would happen, let's say that was the only trade that you did all year. In theory, you would have a $100 short-term gain on your 1099. Now, those two, the wash sale rule doesn't apply to spreads in that sense. Where the wash sale rule will have an effect is, let's say the following week, you do the same thing and you could fall victim to the wash sale. And what the wash sale is if you take a loss on a stock or an option for that matter, and then you get into the same thing within 30 days or something similar, then you could not be able to take the loss towards your 1099. Now, the best way to avoid this, there's two ways to avoid this, in my opinion. The best way is to do your trading in an IRA. None of this stuff affects you in an IRA. Sticks and stones can break your bones, but the tax man can never hurt you in an IRA. And the other way with which you can do that is if you can use a 1256 contract, like the SPX or futures options, then the wash sale rule does not affect those contracts. So have an understanding of it. And if you do have further questions on it, feel free to reach out to me.
There you go, Thomas. How much do we like you folks? Even when you send in tax questions, we will endeavor to answer them for you here on the show. Let's see if we have time. Calendars, that's kind of a longer question. People want to come on the show, and we have time for that. Let's look really quickly here. Scott Sommer wants to know, what's our take on nanos? Your take on how nanos are doing? Are you finding many brokers not supporting it? Or maybe, I haven't pulled it up on every platform that we have, Scott. But yeah, I think my early take on them is that they're not exactly lighting the world on fire. And we heard Henry even say it on, in our chat here when he was in the chat before. He's one of the guys behind the nanos. And he said it on that panel when I was on with him a couple of weeks ago, too, that they're not lighting the world on fire yet. And they're not really meant or ready for the smaller trading accounts that pay commissions because they're just not getting the volume. The spreads will still kill you out there. I think the last I checked on them, they were doing somewhere around 1,000 to 1,500 contracts a day, which, remember, adjust for that one multiplier is not a heck of a lot of volume at all. And also, the thing that threw me for a loop at first, too, I thought they were going to be, a non-standard expiration of SPX. So when I go look for SPX, I can find them. Nay. They are nanos. They are their own ticker. You have to type in nanos to find these things. So that's another thing I think that's thrown a lot of people off. You want to look for your SPX products all kind of in one place, and instead you got to do this nanos ticker. So yeah, I think that's kind of that makes them harder to find on a lot of platforms. I haven't seen a robust brokerage or customer response. I think part of it is because of it's still a little crazy out there. The spreads are wide, and they have this separate ticker you kind of have to know about in order to trade these things. I don't know, Uncle Mike or Mr. Rock Lobster, any thoughts here on how the nanos are doing, and are you finding many brokers not supporting it?
If you have 1,500 volume, that means it's essentially 15 volume if you divide that by 100.
Yes.
So, yeah, with that, it's going to take a lot more than that for me to want to be interested in it. I don't want to be the first.
Or the 15th in this case, but still not a good position to be in. As we keep on rolling, let's go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye out for these days until our next episode on Monday. We say it all the time. Be careful out there. I say at the end of every show, stay safe out there. But also, going into the weekends, there's some literal weekend risk, and we are kind of back in that world now, listeners. All bets are off right now in terms of what's ahead for this market, and many crazy things could happen, including over the weekend. So, yeah, bear that in mind. As we're coming at the end of the show, it seems like whatever little bounce we had, or said we were up to about 41.70. Well, we're giving that back up now, back down to pretty much the lows or close to them of the session, down nearly 3.7% in the S right now. So, yeah, it's one of those times. Let's go around the horn. Let's start with the rockingest of lobster. Mr. Rock Lobster, sir, what are you keeping an eye on for, or I should say an eye out for, until we gather here together on Monday?
Just what we're seeing. You've got just crazy vol. The bid for options in VIX came back again for a while. You just couldn't sell anything about an hour ago, right before showtime. But everything's gotten perky again. So I there's overnight risk. There was, the Russians are like, oh, they're threatening to, with tactical nuclear weapons stuff, and just overall, just really bad news. And to be honest, you got kind of, just goofy government policy. They're not, it's like nobody's got their eye on the ball, really. It's kind of an odd thing. So it's a mix where stocks can kind of slide for a while. And I think that's what we got. So I don't see it really going anywhere. We do have more inflation numbers coming out tomorrow and next week. And, you still go to the grocery store, and nothing's getting cheaper. So, I think that lower GDP growth, negative GDP growth, will start to take some of the the demand away. We're still in this pickle, and we're still in a market that has not found a bottom clearly. So that's what we have. So we were banning about some lower numbers, but it wouldn't surprise me to see a lower number here tomorrow and into next week.
Indeed. Mr. Uncle Mike, same question for you. What are you keeping an eye on as we head on into the weekend, sir?
There's a lot of stuff going on. So what I'm keeping an eye on, at this stage, I think if we can hold 4,000, I think that would be a very bullish thing for the S&P 500. It's a key number. Watching that, also watching the lows of the 10-year note. We're right around them again. We had a rally in the 10-year note yesterday, and then now we're selling off again pretty heavily. So continuing to watch that, and thanking the good Lord that I have a put option in place. So that's what I'm watching.
All right, listeners, that music means we have to get out of here for right now. But don't you worry if you're a Secret Club kid. Hang out in there. We'll have some cool stuff coming at you. And then right after that, we'll be back with Twifo. I'll be joined by the once and future and now present Dr. Bix. Good time to have him on. A little bit of vol out there. We'll also talk probably some nat gas and maybe some metals, rates. Who knows who's going to make it on Twifo. That's why you have to tune in every week. But before we go, let's go back around the horn. Let's start with the rockingest of lobsters. Mr. Rock Lobster, sir, if folks want to go lie to Ted, where should they go? What should they do?
Yes, if you want to go lie to Ted and say you heard the show, 888-TRADE-01, and you get 10% off anything Option Pit sells if you say that you heard it here on the Options Insider Radio.
There you go. And Mr. Uncle Mike, sir, same question for you. If folks want to check out your growing universe of Uncle Mike content, where should they go? What should they do?
Oh, a couple places. I had a couple of videos this week, and I should be all caught up by early next week. Feel free to check me out on YouTube for educational videos. Type in St. Charles Wealth Management. If you're looking for a financial advisor who delves in the option product, assuming it's appropriate for the individual client, check out my website, stcharleswealth.com. And also, you can follow me on Twitter at Mike TOSAW.
All right. Back again in a half an hour for Twifo on demand, folks. Got to wait a little bit till it hits the network. Back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. My ex-folks in town tonight, actually. Going to see them in person for the first time in a couple of years. So that should be fun. And then following after that, 2 p.m. Central, 3 p.m. Eastern with the Rock Lobster breakdown unusual activity for options oddities. Then we head on into the weekend. Stay safe. And back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.